Stephanie, let's talk about these GDP forecasts because all of a sudden we're starting to get economists tweaking their numbers up, and it looks like third quarter GDP might not be as bad as what we thought, and it might take that double dip recession talk off the table.
I think over the last couple of weeks, you've seen the rotation away from some of the defensive stocks into the economically sensitive stocks for the very reasons you're talking about. That GDP is not going to be as bad. That double dip is off the table. That instead of seeing, or not even only a double dip, but we're not going to see flat to 1-ish% growth. Maybe it's more like 2.5% growth. Some people are at 3. I think that's a little aggressive. But if you look at the components of GDP, consumer has stayed pretty resilient. And then you have the manufacturing side of things that have actually also been pretty strong in terms of transportation, auto, and those kinds of numbers.
So if we got a good GDP number on Wednesday, do you think that that at some point we're going to start to push Europe a little bit more to the back burner, or is that fantasy to think that we can do that and try to just focus on what's going on here?
Well, since we're up 15% from the lows seen in October, we are a little more vulnerable to the news that comes out in terms of Europe, and I don't think we can completely divorce ourselves away from that country. However, I would say that there are some good things going on in terms of strong demand has stayed in China. Right, a 9.1% GDP number. I think you're going to see better here in terms of at least the GDP and some of the manufacturing data points as well. And consumer, again, has remained resilient. So I think we're better off now than we were a couple of months ago in able to be able to handle the problems that are going on in Europe. But that said, you've got to be valuation sensitive, and you've got to look at some of these stocks that are up, 20, 30% in a couple of weeks' time. So I think we're in a trading range, but it's just not as dire as the market had expected.
Cautiously optimistic?
I'd say so, yeah.
All right, so Stephanie's cautiously optimistic.